Hello everyone, welcome back to Stock Market Weekly. I am your host Evan Medeiros for Friday, August the 23rd, 2024. If it's your first time joining us, thanks for tuning in, thanks for being here. This is the show where we break down all of the important news and events impacting the stock market through the lens of technical analysis. We try and make some objective decisions looking ahead to see how we can best position ourselves and understand where the market might be going. Now, let's get into it here today. Two catalysts that the market sort of had this week. It was sort of a sleepy sort of digestion week with a couple of catalysts in between. The first was that jobs revision. So on Wednesday, we actually got a revision lower for last month's job report. If you recall, last month's job report was a bit of a standout. The market sort of took that and said, okay, wow, the market is much stronger perhaps than we thought. Maybe the Fed isn't going to be so eager to cut if that is the case. But turns out that revision lower does, on one hand, sad for the economy and the folks affected. Things might not be as strong out there as we thought. So that was a first sort of event that the market chewed on Wednesday. And then, of course, we had Powell out at Jackson Hole giving his speech. And, the key line there really was, the time has come for policy to adjust. That was a direct quote. I think that was a direct quote from Jerome Powell on his press conference, basically saying, look, inflation, that battle with inflation, we won, of course, I'm using sort of my words here, but that battle is perhaps over, and now we need to focus on protecting the economy, keeping full employment. People think that that's perhaps actionable news. The truth is, this recovery rally that we've seen has probably priced in a lot of that, right? I mean, it's not like the market is now just realizing this. We've kind of known this. We've just been waiting for more clarity. We did get that clarity today, but if you look at like Fed futures, CME futures really didn't change a whole lot this today. Good news for the market that we are getting, more, easy policy. But it's not like it really changed the game, I don't think, for anything that was, anticipated. US dollar really rolling over this week. We talked about the weakness last week of how susceptible that looked for breaking down. That accelerated this week. We do have some more economic data. We get PCE and consumer spending next week. And then we have, of course, got NVIDIA, the last of the big heavyweights, really kind of out of cycle here for earnings season, but they are reporting on Wednesday. We're going to take a look at that stock. Stick around. Here we go. Okay, we are back. We've got some charts in front of us. TC2000, that is the charting platform we're using throughout this video. It's a platform we support here at the Trade Risk. We have lots of cool things built for it, and we have lots of guides and tutorials. If you need support on TC2000, it's something we do here at the Trade Risk. So definitely check out our website. For new users, we do have a referral link in the description of this video as well. Now, let's get into the numbers here. You can see another green week across the board. This recovery continues, and this was led by small caps. So take a look here at the Russell 2000. It's up 3.66% this week, really sort of stomping everything else in terms of relative outperformance. Notice the 1 month returns. Russell 2000 is still playing catch up, right? It's still negative here, and most of the other indices are up 3 or 4%. So we'll see if this relative outperformance can continue. Most of these gains, almost all these gains, this relative outperformance came on Friday's session. All right. Now, if we take a look at volatility here, this was up this week. So that is a little bit curious, right? We had up stock market, up volatility. And you can see the VIX now is up at 15.86, up about a point. Nasdaq was up about a point, and even the Dow was up a little bit in terms of volatility indices. I'm not sure if we're bracing here for NVIDIA next week, but a little bit of, unusualness here that is up. Now, if we take a look here at sectors, you can see that we had real estate at the top of the list, followed by discretionary and materials, basically up 2 to 3%. Only one sector in the red this week. It was energy, just barely so. It was basically flat. Technology was an underperformer, and utilities on the underperforming list. Now, if we take a look here at our smart trend filters, there's really not a whole lot of change this week. So this measures price, volume and price action across time, and it prints green, yellow, or red signals, basically denoting the path of least resistance, who's in control. And if you recall from last week, we had lots of transitions up last week. So we had lots of neutral to bullish, basically buy signals being printed across lots of different sectors. Really wasn't too much changing this week, except for maybe biotech confirming its upward trend now on the daily chart early this week. Everything else was mostly continuing. Real estate looking real strong here, just continuing on these gains. So really not a tremendous amount of change. Now, if we look under the hood a little bit further here and we take a look at the number of stocks at 52-week highs, number of stocks at 52-week lows, take a look at Friday's print here. This is impressive. This is strong. This is strength. This is rotation. This is the small cap move that we saw on Friday post-Fed. Take a look at the nice spike here. This is one of now the best breadth days in terms of 52-week highs that we've seen all year long. So that is something to take note of. Remember, we were waiting for more of an oomph either direction, right? Give us, make us pay attention to something. That's what we kind of look at these indicators to do. We don't try and wrestle with all of the micro moves here when there's not a lot happening, right? You can analyze it to death and you can really chop yourself up. But if you try and keep that bird's eye view and then just pay attention to these bigger, single days or the cumulative moves, then that really kind of sets the tone in the right direction. So nice move there underneath the hood, and that speaks to some of that rotation we saw. We'll look at those charts in just a little bit. Before we do, pit stop here for Investors Business Daily. IBD, shout out to them. They sponsor the show. They make the show possible. We've got links in the description of this video. This is their top 10 from their IBD 50 list. Nice showings here, good strength. This list gets updated pretty much daily by them. So grab yourself a digital subscription. You get access to a curated list of top growth, high performing stocks every single day. Now, let's move on to the macro front here. Dollar index. I think this is front and center. We talked about it last week. We looked at this chart. We said, this looks susceptible here. This looks like it could roll. Dollar rolling over is, generally speaking, going to be positive equity outcome, right? Not always the case. It depends what's happening, is more to it and a little more complex. And I don't want to pretend I know all the intricacies, but certainly, dollar rolling over here, certainly helping, underneath the hood. 10-year yield also moving lower this week. Usually, again, these two things, especially at least in this environment, going hand in hand. That was encouraging to see. You can see Bitcoin loved it, up 6.6%. Silver, copper, right? Gold was flat, but gold's been super strong this year. And, generally speaking, commodities liking it. All right. So let's get into some individual charts now. Let's look at some price actions. Kick it off here with the S&P 500 weekly time frame. And we can see now we've got 3 powerful weeks of a bounce, of a continuation in the primary uptrend here, right? As fast as we went down, I would argue probably faster, we have now clawed back and recovered 80-90% of this July decline. So here we go, closing at highs again. Let's kick down to a daily chart. Let's see what's happening here. You can see that we saw this continuation this week, and it was a little bit of a sideways kind of sleepy week with just a few days of strength. And for the S&P 500, it was honestly Monday where most of the gains got printed this week. We were up 1% to start off the week, and we spent pretty much the last 4 days of this week chopping around sideways. Yeah, we grinded up a little bit. We finished strong. We also had a little bit of a knee-jerk kind of sell-off day here Thursday, maybe some pre-Powell jitters in the market, where the S&P 500 closed down 1%. Once again, probably just enough to keep the very active traders on edge, wanting to short the market, wanting to dump exposure, wanting to keep one foot out the door. Thursday probably did a great job at once again failing to find follow through, failing to break the market down. And of course, Friday, we popped right back up. So when we look here at the price action, we have now successfully kind of filled the gap from the 17th of July. We are not quite back at all-time highs, but we're effectively there. The market is cooling off a little bit here. You can see, again, just the way we had a slope of, urgency, and now we're going to a slope of, kind of digestion, right? Up, in a very straight line, catching lots of folks offside, positioning way off balance. And now we seem to be equalizing a little bit in this range. So for me, I want to continue now to just pay attention to this short-term range, this little bubble that we drew here. The path of least resistance now is up. We are, in alignment on the long-term time frame, intermediate term time frame. We're still below the prior high here, so we're not breaking out. We're not pushing at new highs, but we are now at least, kind of digesting, and I think that is good. I think we have nice clear signals that are nice clear levels we can use, 55.60 on the downside for the S&P 500. If we start, finding follow through below the lows from Thursday, that's something to take notice. And if we start pushing and we find follow through above 55.60 in the weekly highs, then, it really can't be that surprising to come back up here and marginally test these all-time highs. Now, the elephant in the room is going to be NVIDIA next week. This is what the market is going to be waiting on. They report Wednesday. We'll take a look at that chart in just a minute here, but at least in isolation, S&P 500, Bollinger Band expanding back up, fierce move to the upside, and a little bit of breathing here is really kind of what's taking place. Nasdaq 100, looks even sluggish, a little more sluggish. Couldn't find the tense I wanted to use on sluggishness. QQQ here, you can see again, Monday did print a strong session here, 1.3%. Notice we really closed below Monday's session though, right? Kind of inside of it, but we didn't take out Monday's highs. So basically we're seeing just a little more kind of sluggishness, right? Back to that word here in the Nasdaq 100. If we threw on an RS versus Qs versus SPY, you'd see that SPY outperformance here. So we'll take note of it. Notice also the placement of the Qs here. It is not as close to the S&P 500 as its prior high. It's about a 60% retracement from, the fall down here in August. So there's some subtle clues, some subtle signs here that the great big tech heavyweights are not leading this market higher. That is notable. It is something where we can, start paying attention to in our allocations, our individual stocks, our places that we want to be in the market. Big cap tech right now, right? Maybe post NVIDIA could be the thing to get it over the line and breathe some life into this and make it stretch for a second leg back up to these prior highs, but we kind of have to wait and see. All right, so Qs, a little bit of a range here in the short term, notable underperformance. Russell 2000, look, we talked about the fact that the Russell 2000 was sort of the cleanest to trade because it had such a clear kind of 210 band of prior resistance, where if we said, look, Russell 2000 is above that band, then you probably want to be long it again. You probably want to be looking at it glass half full, and it got above that band last week. It did chop around quite a bit this week, and Friday was really the push, the momentum, and the volume surge here to get it back into this old range. So keep an eye on this, especially as you start to see those QQQs slow down a little bit. It looks like that money's pushing right into this, and I gotta say, the small cap sentiment is still pretty sour out there. It doesn't seem like there's a whole lot of traders or investors really embracing this trade or looking to allocate here. So I think it's notable, a little anecdotal, but something to take note of. Russell 2000 now pretty close to its prior highs, 2% away. Notice they're not all-time highs like the S&P 500, but they're cycle highs, and I think that's what we need to pay attention to here. So the Russell 2000 picking up a lot of ground, getting back into this old range, filling the gap, and breaking out of this longer-term level that it's been dealing with. All right, so that rounds up all of the indices here. We talked about the VIX. Remember, a couple of, all subtle things we want to take note of this week, though, but the VIX closing up this week is notable. NASDAQ 100 underperforming on a relative basis, noticeable. What else do we have? Gold flat here, but still just such a big year for gold. Continues to look great. Not really too worried about it. What else is moving? USO yeah, it's still kind of chopping around. Nothing too exciting here. We talked about yields and treasury bonds, right? IEF, the 10-year treasury bond, looking good, looking strong. Same thing with TLT. Have a position here in one of our trading systems in TLT, so do have some long trades going on there. Let's move to NVIDIA, and let's break down this trade a little bit. So NVIDIA went through, right? Didn't feel like it, or maybe it did, I guess, depending if you were in it. But it went through a 35% drawdown, right? So from peak to trough here, from the June highs to the August lows, was a 35% drawdown. That's a pretty good correction. That's a pretty good shake of the tree that does, really kind of get people out of the trade and kind of, resets the playing field on lots of levels. It's not quite back at all-time highs. It is outperforming on a relative basis the Nasdaq 100. It's one of the better performers here now for tech. But next Wednesday, it's got earnings, right? And right now, when I looked at the straddle of the options market, it looks like it's pricing in basically an 11% move in either direction. Of course, that can change, with a few more days left until earnings. But an 11% move to the upside is almost perfectly all-time highs. And if you do get that move to the downside, then you're looking at, let's see, last week's lows, 114, let's call it. That's about it. That's about what the options market is pricing in now for an implied move on earnings. Or actually, that could have been the Friday. I'm not sure. That could have been the Friday options data that I used. But either way, this should be approximate. And so basically, look, a 10% move on a $3 trillion company is pretty massive, but that's what the market's looking at here. And so, again, I think it's going to come down to the guide. I'm sure the numbers are going to be great. It's a matter of what's in the stock in terms of expectations right now. How are they guiding? What's, the read on CapEx spend from all these other Mag 7 stocks, and we'll see how the market, really favors it right now. It feels like tech is a little bit out of favor, right? It feels like, if I had to totally guess here, right? I'm not acting on this, but it feels like, a gap up might be an excuse to just kind of sell the news, and, you see that tech trade underperform. Like, that would not surprise me at this phase of the market. I think I would be at this point more surprised of some type of gap and go up. Again, I've got no horse in this race. I'm not trading it. I'm not going to take any direct position here in NVIDIA. I have a position in the Qs through our trading system, but I don't have any direct NVIDIA exposure. But yeah, we'll see. I mean, I would not be surprised to see this stock range bound here again for some time, right? A couple more weeks, a couple more months, right? Go into the end of the year. Let's see if we can chop around. Maybe earnings gets us up to 140. Maybe it gets us up to 141. It gets that top mag move, and then it starts to sell off. And it's the finally, one that doesn't just create a gap and go sort of session here. Again, all speculation. Just, know that I'm not trading on that specifically, but the Mag 7 trade feels a smidge tired right now. So 11% move. Good luck for all of those playing. Let's see what else. Let's take a look at some of the other Mag 7 stocks. All right, let's go underneath the hood here. So you can see that, yeah, NVIDIA was the best performing this week, followed by Tesla. If we take a look at some of these charts, though, I mean, look at Microsoft. In fact, this is a great example. I didn't look at this chart prior to recording, but this sold off here on Thursday, and then it was a very muted session. I mean, especially for how strong things were on Friday. I mean, Microsoft here looks a little bit weak, a little sluggish. NVIDIA looks great. Google, again, I have a position in Google. It looks a little tired here, but, I'm maintaining a long exposure through our trading system. Apple continues to look one of the best here. Meta, kind of hanging out back at highs. Amazon, all of these stocks really got hit on Thursday, or a lot of these stocks got hit on Thursday and then didn't fully recover. So, we'll see. Again, just some of that rotation trade kind of, perking up there. What else is going on? Large cap. Let's see. Oh yeah, Workday had a big move this week. Weekly chart had a big move. You can see up 12%. Target had another big move off of earnings. This company's been in a tougher spot longer term, but seeing a nice push back there. And let's take a last quick look here at Bitcoin, having a great week. Back into this range. Not a whole lot to say. It was nice that on Friday, like small small caps, it did clear over a pretty important level, is 61.5, 62. It's been kind of bumping its head against it for the last week or two, and we are starting to clear above that right now. If you look back, typically when Bitcoin gets over the 62 area, it does tend to move. It tends to get back up towards the top end of that range. So we'll see, but still pretty much longer term in just a sideways consolidation and not a whole lot of other excitement happening at this time. But don't sleep on it, because we know Bitcoin moves quick. So that is what I have for this week's video. Hopefully you had a great trading week out there. You managed to get through it. Big month end, September, post Labor Day. We'll see the volume start to pick back up again. Got elections coming, faster than we all probably want, and lots to digest here going into the end of the year. So thanks again for spending your time with me every single weekend. We'll be back here on Friday. Don't forget to check out the links in the description of this video. TC2000 Trading Systems, IBD, lots of cool stuff for traders. Take care. Have a great weekend. We'll see you back here next week.